everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 10th of May 2013, Friday end of week. We're going to look at the 4 majors this morning, starting with the euro against US dollar. Just have a glance and see what happened yesterday on the market. So you can quite clearly see that price fell yet again at 38.2 February tracement area, and I mentioned we saw price trading above this area yesterday. We wanted to see price actually finding support above it. Did it find support above 38.2? No, as we saw price falling back yet again for a umpteenth time, and primarily yesterday afternoon in particular, because of the unemployment claims that came out for the US market, which were a lot better than they expected, which drew the euro or any cross pairs against the US dollar down, and the US dollar rallied against them. So as we stand now, the 38.2 clearly a resistance level, a major resistance level near term, and as long as that maintains, then we should be looking to the downside. So where is price now headed after yesterday's consolidation? You can see the bearish engulfing candle. It's taken us back to a price support and resistance level in the shape of this previous swing area here, and it's consolidating. You can quite clearly see most of the action that we've seen for this particular pair for the past month or so has been within this range. Okay, so you can see that the institution, the 20 and the 50 pair moving average all moving sideways flat, which is telling you there's no true sentiment or trend sentiment in here, and prices just move sideways. So clearly a resistance level above us and a support. So it needs to get below all of this. So what we have today in terms of what news could move the market, yesterday being a closed a bank holiday for euro, the only news that was going to move the market was potentially yesterday afternoon's news, and that did in fact happen. Friday today we have G7 meetings all day, guys, so everybody's going to be away. It's going to be a long weekend, then sitting around talking. We just had the German trade balance figures out at 7 a.m. GMT this morning. The forecast was for an 18 billion, which was higher than the previous figure of 17.1. It actually came out at 17.6, so not as high as they forecasted, however still stronger than the previous figure. So mixed signals there. Yet again, they were expecting a stronger figure on the trade balance figures. Not as they were 0.4 million short, and it's still positive, however not as positive as expected. Is that going to influence price? Not necessarily. I think that you'll probably be happy with it still being higher than the previous figure, so we are still seeing growth, however not as big as they expected. The G7 meetings today I think is going to be where everybody's going to be focused on. Then this afternoon we have a lot of news out for the US market. We have Mr. Bernanke talking. There's a number of FOMC members talking, and there's also the federal budget balance figures. Okay, so as it stands at the moment now, where price is trading to this prior consolidation area, if you look at intraday, you've got the institution to deal with on the 4-hour time frame, and the most important thing to see here is we're getting a bit of mixed signals. There seems to be a lot more red intraday. Okay, negativity, we've seen that quite clearly. There's a lot of resistance here. Price is not really making any higher highs and stuff like that, and you can see that the moving averages in particular are all pretty negative, so all above price. Bar the 4-hour, you can quite clearly see where price is trading right now, and we're not too far off from the all-time low over here, this consolidation low. You're roughly about 40 pips away, and you can see the RMO as well intraday complementing the moving averages on the higher time frames. The only ones that are really good are your longer term on the RMO, which is still above, but even then the institution moving average on those time frames is still above price. So very mixed signals, and negativity still outplays the positiveness here. However, we've got to be well aware that on our daily we're trading into a major support and resistance. You can quite clearly see here on the 4-hour we're trading above the institution for the over a period of time since April. We haven't been above this institution for some time. The last time we were above it was in February, so you can quite clearly see a negative trend to start this year off. However, that's been breached. Price is above the institution now, above this swing low scenario, however not being able to get above the 38.2, and getting above 38.4 and kicking on from that, it's always fallen back down into this consolidative range. So it's got to get below the institution, get below the support here, and once it's done that, then we'll be trading into cleaner air, and then we should be looking ultimately back down towards that 23.6, which is a good healthy 250 odd pips away from where we are right now. So being patient. Would it be best to give today's weight to the market? Preferably, if it's going to give you a genuine signal for next week, then possibly it's far better just to stand aside for the euro and then take it again once once the new week starts next week. On to sterling. Let's have a look. This is my weekly daily highs way up here in January or December of this year, down to the low that we saw currently in March. And what's happened now is you can quite clearly see that price has actually pulled back to certain levels. You got the February tracing arrows here. You got the 23.6, which is this yellow dashed line. The major long-term monthly support and resistance February tracement area is this one over here, the 23.6. This constitutes to that 15,300, which is a major support for this particular pair since 2010. We saw a break of that area, pull back, and then a continuation down to this 14,800 mark, which was the price support as well back in 2010. Since then, however, we haven't seen price falling any lower. MACD and RMO have started to work back, in doing so, reattempting this 15,300 and eventually getting above it. And once it got above it, it's now come unstuck at the 50% retracement area. You can quite clearly see a full week now of resistance at this particular point. And yesterday's news on the favorable unemployment figures that came out for the US market has pushed the sterling lower, and in doing so engulfing. And the one thing it's done now is taken us back towards this price support and resistance level here in the shape of the 38.2. Get below that, then we could see a potential target back down towards the 23.6, which is 50 period moving average, which is a good 100 pips away. So intraday, if we get below this area here, there's a good noticeable target for the foreseeable future. You can see swing highs indicating upside movement, which is what you want in an uptrend. However, you can quite clearly see near term here, the 50% February tracement area has clearly been a resistance level for this particular pair, and as long as that maintains, then there's more likely for price to be consolidative. And if she's going to do the consolidative thing, she's going to move back to previous support or February tracement areas, and you quite clearly see that's where we are trading right now in real time. So you can see there's a lot more negativity on sterling compared to the euro. RMO in particular is all below the zero line, which is constituting that we're in a negative scenario overall. However, you can quite clearly see there's one or two areas where we've got a bit of blue, but we should be looking for negative sentiment. As long as there's resistance above price, we should be looking to the downside. We are trading at the downside support and resistance here in the shape of the 38.2 February tracement area. So we're going to see consolidation, and that's exactly what we're seeing now on our shorter term time frames. The intraday, you can see a lot of indecision now after on the 4 hour in particular, bearish engulfing. Great opportunity to trade lower from that bearish engulfing. There was a good from where it closed to where it is now, 90 odd pips. So good opportunity intraday yesterday to make that. You can see as price has failed or reattempted the same high at this 50% line, the RMO has clearly fallen off. So you can see that sentiment really dwindling as long as we kept going. And the MACD also confirming that these highs getting bigger than the prior one, so telling you that sentiment wasn't genuinely behind this move as we headed up, and now we're falling lower. So now you can see the RMO is clearly below. However, we are trading at the 38.2. Got to get below that, and then we can be targeting ideally the institution moving average as our first potential target, which is 60 odd pips away. Ultimately back down towards the 23, which is 100 pips away. US dollar Swiss franc, a lot cleaner than euro, a lot more positiveness. Yes, a lot of negativity on our monthly. However, we have been in a downtrend in our monthly time frame. However, near term, you could see there's a lot of positiveness, and you can see prices making higher swings recently, which is important. Swing high, and you can see where price yesterday, especially with the US market news that came out with unemployment figures being positive, that's had a positive effect on the US dollar against Swiss franc, and now she's moved higher. She's moved higher now. And what she's doing is she's tackling a prior swing area. Okay, remember, if you can see quite clearly here in the past, price failed to get above this area over here, and in doing so, price pulled back. However, still holding on to this 23.6 February here, which was most important. As long as she's doing that, then she's going to be tackling the higher highs. And if that's the case, we want to see this area at the top here being broken first, finding support, and then kicking on. You can quite clearly see price on a number of occasions attempted this area, but failing to actually find support of this area and then pushing on. So what we don't want to be doing now is buying into this major support and resistance level near term here. You can see there's quite a lot of consolidation in this area. Rather get above it. Once we get above it, make sure our R squared intraday is all still looking positive, is with the trend sentiment, and then once we can do that, then we can kick on towards that 23.6 February tracement area, which is to the top side here, and that's a good 190 odd pips away from where we are now from this consolidation. So rather put in an alert signal on your hourly, get above this consolidation high here. Once we get that, enter, stop under the price support here, which if you look at it from the white line to where the support is over here, you're risking good 40 pips, 50 pips. However, your target is a good, if you take the white line to the upside, it's a good 190. So your risk to reward ratios are perfect, more than adequate for that trade to the upside. So be patient with this particular pair, get above this consolidated range at the top here, which is predominantly showing on our 4-hour and our daily. Get above that, and then we should be looking for higher highs. Good news for the US dollar Japanese yen. You can see on the daily here a lot of resistance here at the 50% mark. However, sentiment was still looking higher. And what happened yesterday with that favorable news yesterday after the US employment figures, it's pushed and broken up, which is fantastic. That's what we wanted now. The 50% line, which is our monthly fib retracement area, has now been breached, which is a good sign that sentiment still wants to move higher. What we should be looking for now is a bit of consolidation above here. This needs to be our new support intraday, this 50% line, which is at the 99. And our next target is going to be the 61.8 now for the foreseeable future. And that is where from where price is trading right now to that level, you're looking at a good 460 odd pips, guys. So there's a lot of potential targets for this, but we need to see price now maintaining above. There we go, got a buy signal. You can see majority of my temperature is telling me I should be looking for buying opportunities. What I should be looking for is the RMO, which should clearly be above the zero line, and our moving averages, which is our institution moving average, complementing that. Now we want to see the R squared over here, especially intraday. If it's buying sentiment, to be all blue. The only one we don't have it is our 15-minute, and you can see it's been quite consolidative. However, as long as it maintains above this 50% retracement area now, above here, if we do see a pullback, so we don't see a genuine pullback at the moment now, we have a low, look for a genuine pullback, and if it stays above the 22.6, etc., or the 38.2, but as long as it stays above the 50%, which is the 50% of our long term, then we should still be looking for buying sentiment. And as long as it maintains above this area over here, we should be looking for longs for the foreseeable future going into next week. So bide your time, look for a patient, look for a break of the current high, stop, enter, target to the upside, which is our 61.8 above price. That's it, guys. Short and sweet today. The ones you should be looking at are your US dollar crosses. A lot of strength with the US market yesterday, coming up with favorable, with better unemployment claims, which is a good sign for things for the US market, and that's going to be reflected on any US crosses today. So just be aware, we have the G7 meetings all day. They'll continue into this weekend. So that's going to be taking, there'll be if there is any speculation today, it'll be generally rewarded because of this. We have at 9:30 GMT this morning, we've got the trade balance figures for sterling, which is they're looking for a slightly positive figure. Before it was a negative 9.4 billion, now they're expecting a negative 8.9. So we're still positive, it's working back towards that zero line. So the trade balance, we've seen great manufacturing figures out for sterling recently. We've had great production figures for sterling recently, and this trade balance figures should hopefully tune in with that. Other than that, we have FOMC meeting speakers this afternoon for the US market. We've got the Canadian unemployment, we've got employment change and unemployment rates for the Canadian market. So there's a lot of news this afternoon for especially people on the other side of the lake, for Canada and the US. But most importantly, G7 is probably going to be the talking point today. Other than that, have a fantastic trading day. Have a fantastic weekend with family and friends, and I will catch up with you next week. Have a great one. Trade serenely.